Did you know that investing in the stock market has helped millions of people build wealth? But over 50% of beginners never start because they think it's too risky or complicated? Here's the good news. Anyone can learn to invest. Investing in stocks is one of the most effective ways to build long-term wealth. In this video, you'll learn what stocks are, how to invest, and beginner-friendly strategies to grow your wealth step by step. We'll break down complex concepts into easy-to-understand steps. Let's make investing simple for you. Welcome to Valuable Finance, where smart minds come to master money, build wealth, and secure financial freedom. If you're ready to take control of your future, you're in the right place. Many people think investing is only for the wealthy or requires years of expertise. You might even feel lost in terms like dividends, indexes, or brokerages. It's common for beginners to feel overwhelmed by the sheer amount of information out there. The fear of making mistakes can be paralyzing. But don't worry, I've been there too. In this video, I'll walk you through everything step by step, so by the end, you'll feel confident and ready to start investing. Stocks represent ownership in a company. When you buy a stock, you are purchasing a small piece of that company. By purchasing stocks, you become a shareholder, owning a part of that business. This ownership can give you certain rights like voting on company decisions. Shareholders can benefit from the company's success through dividends and stock price appreciation. Companies offer stocks to raise money for growth, new products, or expansion. Instead of borrowing from a bank, they share ownership with the public, accessing a larger pool of capital. Companies use this capital to invest in new projects, hire more employees, or improve their products and services. Publicly traded companies list their shares on stock exchanges, like the NYSE or NASDAQ, allowing anyone to buy and sell shares. Investing in stocks can be a great way to build wealth over time, but it's important to do your research and understand the risks involved. With the right knowledge and strategy, you can make informed decisions and potentially see significant returns on your investments. As you begin your journey into the world of stocks, remember to stay informed and keep learning. Happy investing! To start investing, follow these 3 simple steps. 1. Open a brokerage account. 2. Set a budget. 3. Start investing. These steps are essential for building a solid foundation in the stock market. Let's dive deeper into these steps to understand why they are crucial and how you can implement them effectively. Step 1. Open a brokerage account. This is your gateway to the stock market. A brokerage account acts like a wallet for your investments, allowing you to buy and sell stocks. It's essential to choose a reliable brokerage to ensure your investments are secure. Here are some popular brokerage platforms to consider. Fidelity, known for its low fees and excellent research tools. Charles Schwab, great for beginners with its easy-to-use interface. It offers a range of educational resources to help you get started. Robinhood offers commission-free trading and a simple mobile app. It's perfect for those who prefer trading on the go. Vanguard, ideal for long-term investors, especially for index funds and ETFs. Step 2. Set a budget. This step is crucial to ensure you don't overextend yourself financially. Only invest what you can afford to leave untouched for at least 5 years. This helps you ride out market fluctuations. Start small. $50 to $100 per month is a great way to begin. This approach allows you to learn without risking too much. Step 3. Start investing. As a beginner, focus on beginner-friendly options like index funds or ETFs, which we'll explore shortly. These options provide diversification and lower risk. Building wealth in the stock market typically happens in 2 ways: long-term growth and short-term strategies. Long-term growth. By staying invested, you benefit from compound growth, where your earnings generate more earnings over time. For example, investing $200 a month for 30 years at an 8% return can grow to nearly $300,000. Short-term strategies. If you have a short-term goal, consider investing in less volatile assets like dividend-paying stocks or ETFs with lower risk. Short-term options can help you reach financial goals like saving for a down payment or a vacation, but remember to stay cautious and avoid excessive risk. Another way people get wealthy is by investing in high-growth stocks. These stocks can offer substantial returns if you pick the right companies. For instance, early investors in companies like Apple or Amazon saw their investments grow exponentially over the years. Whether through long-term growth, short-term strategies, or high-growth stocks, investing wisely in the stock market can help you achieve financial success. As a beginner, focus on these types of investments. Starting your investment journey can be daunting, but choosing the right stocks can make it easier and more rewarding. Index funds. These are collections of stocks that mimic the performance of a market index like the S&P 500. They offer a simple way to invest in a broad range of companies without having to pick individual stocks. They're highly diversified, which means lower risk for you. Diversification spreads your investment across various sectors, reducing the impact of any single stock's poor performance. ETFs, exchange-traded funds, are similar to index funds, but trade like individual stocks. This means you can buy and sell them throughout the trading day, giving you more control over your investment. They offer flexibility. You can buy or sell anytime during market hours. This flexibility can be particularly useful in volatile markets where prices can change rapidly. Both are cost-effective, diversified, and great for building wealth over time. Next, consider dividend stocks. These stocks can provide a steady income stream, which can be reinvested to buy more shares. These are shares of companies that pay a portion of their earnings to shareholders, typically every quarter. This can be a great way to generate passive income while holding on to your investments. Finally, let's talk about blue-chip stocks. These are shares in large, well-established companies with a track record of stability and steady growth. Investing in blue-chip stocks can be a safer option for beginners. To recap, stocks represent ownership in a company, and companies offer stocks to raise funds for growth. Open a brokerage account, set a budget, and start with beginner-friendly options like index funds or ETFs. Build wealth through long-term growth or short-term strategies for specific goals. Start with blue-chip stocks or dividend-paying companies and analyze stocks using key metrics like 52-week, high, low, and market cap. Which beginner strategy will you try first? Share your thoughts in the comments. If this video helped, give it a like, subscribe for more tips, and share it with a friend who's ready to start investing. Remember, save, invest, and build wealth for life.